most people are focused on the price, something much bigger just happened. Morgan Stanley is entering the Bitcoin ETF market.
The value of the Bitcoin will grow at a rate and pace that the value of the debt does not grow because it's a fixed dollar-denominated debt. So what happens is the burden of your debt shrinks over time. And I think that this is the hack. Freedom is collapsing. It's collapsing faster than the dollar, and we need to be playing defense. Technically, the owner of the stock is the custodian, and you're the beneficial owner of the stock. So there are some weird things that are happening in the background. It takes any imperfection that it can find and perfects it. And that's what Bitcoin is. It's perfect money.
Hello. Welcome back to the Daily Stack. I'm your host, Rob Wallace. So grateful for you to be here with us to kick off a brand new week in Bitcoin. Of course, this is Bitcoin News Weekly. We take the biggest headlines in Bitcoin and we break it all down with a new guest each and every week, so you are caught up and ready to go for what comes next. Never a dull moment in this industry, of course. And today we got some big headlines. Coinbase getting into Bitcoin-backed mortgages. And of course, the Bitcoin ETF war is heating up. There's a new entrant in the game, and they are here to make a splash. So let's get right on into it. While most people are focused on the price, something much bigger just happened. Morgan Stanley is entering the Bitcoin ETF market. And before you think you've heard the story before, you must think again, ladies and gentlemen, because this one is different in ways that actually matter. Okay, first off, the basics. The ticker is MSBT, and the fee, 14 basis points. That's 0.14%, clocking in lower than Grayscale and 11 bips lower than BlackRock's IBIT. This makes Morgan Stanley's offering the lowest of any spot Bitcoin ETF on the market. And this is why this fee is the whole story. Morgan Stanley has 16,000 financial advisors sitting across from the wealthiest clients in America. We're talking old money, boomer money, trust fund money, the kind of capital that moves slowly, but when it does, it moves large. For years, those advisors couldn't pitch IBIT without an awkward conversation about why they are recommending a competitor's product. Well, this friction has just completely disappeared. At 14 basis points, there's no conflict or explanation needed. It's simply the best priced Bitcoin ETF in the room, and Morgan Stanley's logo is all over it. Okay, so now let's do some math. Morgan Stanley has suggested a conservative 2% Bitcoin allocation. Apply that across a fraction of their roughly $9 trillion in assets under management, and you're talking about flows that would dwarf anything we've seen since the launch of the Bitcoin ETFs. For context, BlackRock's IBIT was the fastest ETF in history to reach $80 billion. And they absorbed roughly 500,000 Bitcoin in just the first year alone. Morgan Stanley has the distribution to match that and maybe surpass it. And they're doing this right now during one of the lowest sentiment periods in Bitcoin in years. There is zero retail frenzy going on. There is no headlines driving FOMO, just quiet, deliberate institutional positioning. But this is how the professionals accumulate. And in hindsight, it'll all be too obvious. All right, ladies and gentlemen, thank you so much for being here. We got my man joining us today, CJ Constantinos. How are you doing, sir?
I'm doing great, man. Thanks for having me, Rob. It's great to be on Bitcoin News with you.
Yes, my friend. It's been about a year since our last conversation that we had recorded. Much has happened. Why don't you tell people a little bit about your Bitcoin story and the company that you started, People's Reserve?
Yeah, absolutely. So I started out in Bitcoin in 2013, started buying between $100 and $150, watched it go all the way up and then come all the way back down, and finally was forced to ask the question, what is this? How did it grow so much and how did it shrink so much? Is this a scam? Why is it so volatile? And all of that led me getting into mining. So going into the 2016 halving, I was running a mining farm, ended up creating the Bitcoin fair value algorithm, which miners still use to this day to manage their treasury. And then got lucky and kind of sold that farm off going into the 2017 peak, and got really interested in decentralized finance because I saw Bitcoin as money And I knew, this is engineered money. This isn't natural money like gold. It takes the characteristics that we learned from natural money and gold, and it makes them better. It engineers it. It's human creativity putting its little tweak on what nature provides in order to get it better, right? We have the horse and we engineer the engine. We go from 1 horsepower to hundreds of horsepower. We have fire to give us light, but we engineer electricity and we harness it to get it 24/7, 365 for pennies per kilowatt hour. So the human engineered version of something really makes it the dominant form of something because it takes any imperfection that it can find and perfects it. And that's what Bitcoin is. It's perfect money. But once you understand Bitcoin as perfect money, what does that mean for the rest of the world, right? I have a background in accounting and finance, and there's a little bit of a combat. There's a little bit of a misunderstanding between, does the world need to end for Bitcoin to be successful? What is the next step after something is accepted as money? And the answer to that question is it becomes collateral, and it becomes something that you can lend against or borrow against. And it becomes, in our case for Bitcoin, the most pristine form of collateral in the world. It takes the shortcomings of gold as collateral, the hard to transport and secure. And it takes the best of what you get with cash equivalents, easy to transport and easy to secure on a computer ledger. It takes the best of both of those collaterals and combines them into this new hybrid digital pristine capital or collateral that the world's never seen before. And now we can see the big boys are looking at it and starting to understand, wow, if Elon Musk can borrow against his Tesla shares to buy Twitter and call it X, then what are these Bitcoiners going to be able to do when they borrow against their Bitcoin? What are they going to buy? How are they going to move the world forward? And as you said in your intro, in hindsight, it will all be obvious.
Yes, sir. Well, I think that you are one of the best communicators in Bitcoin. It's always a privilege to have you on the show here. And I didn't know that. I didn't know that you ran a mining farm and then sold it at just the right time in 2017. Good on you, dude. Yes.
Very, very lucky. Very lucky. It was at the time where I realized, wait a second. It's not just the halving that doubles my cost of production. It's the difficulty adjustment that is going to continue destroying that. Like this is, and when we get into the Morgan Stanley news, I'll try to connect those two together because it's very interesting how free market economics works and creates incentives.
Yes, indeed. So yeah, let's hop on over to the headlines because that is what we do here on this show. We talk about the Bitcoin News Weekly newsletter. Comes out every single Monday morning, 7 a.m. Eastern, straight into your inbox. We're breaking down the biggest headlines in all of Bitcoin. And this week's title is the $9 trillion giant coming for Bitcoin's ETF crown. Of course, we got Larry Fink, the current king of Bitcoin ETFs. He's a little scared because he sees Morgan Stanley is entering the arena here. So we got lots of headlines, and I always like to start off with the adoption section. And there's some Coinbase news, but we'll get on to that later in the show because it relates to what CJ does for a living now, which will be very interesting to break down later. But in terms of development, we got to talk about this big news. Production Ready launches a nonprofit to fund a conservative Bitcoin client, aiming to reduce reliance on core, support multiple implementations, while strengthening decentralization and security. So, CJ, did you hear about this news?
Yeah, absolutely. And I think that's one of the best things about Bitcoin is that the community itself understands the importance of decentralization and security. I believe MicroStrategy is now, or I should say Strategy, is now creating a director of security and getting more involved in securing the network and brainstorming these things and game theorying these things out for everybody. And that's what everybody really needs to understand. Typically, only a business looks to protect itself. But in Bitcoin, you have a community of people protecting itself. So it's a very interesting dynamic that we don't see in anywhere of finance. You brought out earlier, Larry Fink is a little bit worried because Morgan Stanley's coming onto the scene. So these guys are competitors. But at the same time, BlackRock and Morgan Stanley, they're friends when it comes to the Bitcoin network because they want to support the network. So you can be enemies and friends at the same time because of the unique incentives that are created around the Bitcoin protocol. And paying attention to decentralization, too, is of the utmost importance. We know from the Bitcoin Cash fork, the big block argument, and trying to get Bitcoin to do it, the everything chain, when really it only needs to be money. And that's what makes it so valuable is that it is that perfect form of money. But making sure that running a node is cheap and easy so that the network can remain decentralized is of the utmost importance. So I love seeing this news. And again, it just hammers home what makes Bitcoin different than every other value proposition in the world is that there is a competent aggressive community built around it to protect it and continue to make it stronger year after year.
Yeah, absolutely. And so when it comes to Bitcoiners, of course, you said that we are incentivized to support each other and support the network, but we're also a cantankerous bunch, right? And we like to fight and we like to sometimes go at each other in order to better the network and make sure that the best ideas are moving forward. So over the last year, we've seen, of course, a big debate between core versus not, who is running the proper implementation of Bitcoin. And so I think out of this debate was born this new announcement. We've got Samson Mao, Jimmy Song, Parker Lewis, John Ratcliffe. They're put together a group called Production Ready. This is a nonprofit, and they will be working towards creating a new client for Bitcoin. Of course, Bitcoin Core is the most famous one. Over 95% of node runners use Bitcoin Core, the different versions of it. Bitcoin Core version 30 made some people not so happy. And so there's been a splinter off with knots. So now this group is creating a new client for Bitcoin. This, of course, is a fork of Bitcoin Core, as is Knots, but they take a different approach to it, and they want to be conservative, they're saying. So they want to edge towards ossification so that Bitcoin is money, it stays money, and doesn't do some of these other things that are being used for Bitcoin, whether it's ordinals or stamps or anything other than using Bitcoin as money. So yes, this is an interesting proposition here. It's a new charity that they're going to fund devs to create this Bitcoin clients. And I just think it goes to show that Bitcoiners, when there's a problem, they will find solutions. And at the end of the day, I think it is good that there are multiple clients for Bitcoiners to run on their nodes and to make sure that there's an equal dispersion in terms of governance and development choices. So yeah, just any closing thoughts there?
Yeah, I just think it's very interesting because, Satoshi himself put a message in the very first block.
Mm-hmm.
So, I think Satoshi would have said that, it's not for messaging, it's money, right? It's not for all these extra things that are trying to be forced on it. But if you want to put a Bible verse in block 666666, then you're free to do that, right? And remember what happened with ordinals as well. It was right after the halving, and the miners were concerned about their profitability, right? Because the Coinbase is cut in half, and the ordinals were paying exorbitant fees to the extent that the fees were actually greater than the Coinbase reward. And there's very few times in Bitcoin's history where that's actually happened.
Mm-hmm.
And then what happened? It went away. Yeah. Now, why did it go away? Because the fee itself made it too costly to make that ecosystem grow, because it's not meant for that. It's meant to be money. But if you want to squeeze in a message every now and then, like Satoshi did in the Genesis block, then go right ahead. Mm-hmm. But it's money, and that's what it's meant to be used for. And the fees itself made that marketplace go away. So interesting dynamic. I'm not here to say who's right and who's wrong, because obviously there's examples of Satoshi himself putting a message in the block. And it's very clear and obvious that Bitcoin is the perfect money and it doesn't need to be anything else. So it's just amazing how you can have two competing ideas come together and actually output the best form of something. And it must be like what Elon Musk boardroom looks like. I envision, I saw this drama going on where you have big tech, and it's like you have to ask for permission, and there's 3 or 4 meetings that you're not even involved in before you get a yes or no answer. But over at X, if you're an engineer, you determine what that yes or no answer is, and you live with the responsibility of that. So the freedom to be able to iterate and build out is something that shows that you can be advanced much quicker, and you can get stronger much quicker. And if you look at all the different versions, right? You mentioned Core V30. How many years has Bitcoin been around? And we're on V30. What does that mean? It's always upgrading. It's always evolving. And that makes it one of the best forms of money in the world.
Yes, competition seems to lend to evolution, right? And the better option usually wins. So we will see how it all plays out in the marketplace. But speaking, as you said before, strategy, they just launched a Bitcoin security program and opens hiring for a director of Bitcoin security to coordinate with experts on network resilience and trust. So strategy wants to contribute more and more to the Bitcoin network in ways that it can. And I think that this is an interesting job role that they are opening up. So they want to coordinate with global crypto, cyber, and Bitcoin experts to strengthen the network's security, resilience, and trust. The company is hiring a director of Bitcoin security to lead this effort. And so serving as the internal authority on protocol, cryptography, and custody, while acting as a key external liaison across the industry. So they'll be working on end-to-end spanning threat modeling, key management, multi-sig custody design, and wallet architecture. Very interesting position here opening up. I can't wait to see who actually fills that role, who can be in charge of securing the world's largest Bitcoin stack by a known holder individual, right? The strategy, MSTR. Super interesting over here. And of course, because strategy has yet to really show a public proof of reserves. Of course, they are an audited company. We know that they have their Bitcoin that has been looked at multiple times on chain moving, but still there is no one place where you can go like with MetaPlanet to go check the proof of reserves there. So what do you think about treasury companies, proof of reserves, and just security overall for how these treasury companies secure their Bitcoin?
Yeah, I mean, I think proof of reserve should really be the standard. I don't
Mm,
really think a lot of people understand the level of counterparty risk when you are trusting a custodian, and that's been the typical setup for stocks. And if you dive down that rabbit hole, technically the owner of the stock is the custodian, and you're the beneficial owner of the stock. So there are some weird things that are happening in the background as far as how the ownership is defined. This self custody concept is kind of new to the financial world because it creates blockers within the existing system, especially when you're talking at the collateral layer, where if you don't have custody, then I can't extend you liquidity. So therefore, it needs to be with a secure custodian that we trust as a counterparty, and you're going to need to trust them as a counterparty so that we don't need to hold it and you don't need to hold it. And then you can see how just everything builds up, right? The umbrella, this is where the middlemen come from, right? We're always like, what are all these middlemen doing here? Well, the middlemen were designed to create trust, but Bitcoin was designed to eliminate that trust and it being a self-bearer asset. So there's a little bit of the Bitcoin ethos kind of mixing with the TradFi ethos, and we're kind of figuring out how to work things out and how to understand, how do we get this system set up where we don't lose the power of proof of reserves and self-custody and on-chain, the ability to track things on-chain versus how do we protect privacy and how do we make sure that institutions who want collateral arrangements, because that's one of the benefits of holding Bitcoin on your balance sheet. You should be able to tap into that purchasing power at any time and source liquidity. And you should be able to do it at the cheapest rate in the world. I believe Bitcoin as a pristine collateral makes the holder of Bitcoin the true risk-free borrower, right? Having access to the printer and being able to print more and pay it makes you risk-free because you can always pay it, but you don't know what you're going to be able to buy with that. With Bitcoin, you're risk-free because you're putting up a 24/7, 365 liquid collateral that can be settled in 10 minutes. So it's a stronger collateral, not that there's an infinite amount of it. And we need to figure out how those things come together as the integration of Bitcoin into the TradFi system accelerates.
Yes, one thing that you are working on closely, as we will talk about later on in this show. Now I want to hop over to the market section. We got a juicy regulation section with some pretty interesting stories over there. But first, we got to talk about Morgan Stanley. Of course, it's the title of the show. They filed for their Bitcoin ETF, MSBT, at 14 bips fee, which is way lower than the 25 bips that BlackRock, of course, charges. And they are the king of this Bitcoin ETF market. Morgan Stanley, 16,000 advisors out there, right? $9 trillion assets under management. If they just had all their clients put 2%, you'd have a Bitcoin ETF that is like 3-4x larger than the current BlackRock Bitcoin ETF. So what do you think is going on here? This is, of course, more competition in the marketplace. Do you think that Morgan Stanley can overtake BlackRock when it comes to positioning with the Bitcoin ETFs?
Oh, absolutely. And I think that's just based on the basic rules of free market economics. It's going to have an advantage by having a lower cost. And I think, for every Bitcoiner, this is obvious, right? Like, obviously, the big guys are going to adopt it. The financial advisors are going to be able to promote it. It's pretty obvious, as you stated in your intro, in hindsight. Oh, Morgan Stanley launching a Bitcoin ETF? Yeah, because there is institutional adoption, and the price might not show that right now, but I think they're pretty happy about that. Right? Morgan Stanley would love to launch their ETF at the bottom of the market because 2 or 3 years, 4 years from now, they're going to be able to tell clients, look, we know how the market works. We timed it right. We launched it at the bottom so you guys can get the best advantage. We gave you the cheapest fee so you get the best advantage. So it's going to be a bragging point for them. And I think it shows that they understand where the marketplace is too. And they wanted to push this out and get it where it needed to be. But most importantly, and I hope I don't bore your viewers here because I'm a first principles type of guy. And I think the economics behind this are super important. And I want to just kind of lay out like how free market price discovery works and why capitalism works. And you see BlackRock come out with 0.25% or 25 bips of a fee. And then Morgan Stanley looks across the aisle and says, wait a second, that's one of the most successful ETFs the world has ever seen before. These guys are making a freaking fortune. It does not cost 25 bips to manage the ETF. They are killing it. We got to do this too. So a producer produces something, there's demand on that product, and the more demand there is, the higher the price is. So being the first market mover, they got the 25 bips out there. Now Morgan Stanley comes along and says, well, you know what? We know how much it costs to run an ETF. We can do this for much lower. We can do this for 14 bips, and we are going to attract people. And what that happens is that's how the free market price discovery cycle leads to pushing costs towards their cost of production. So in this case, the cost of production would be the cost of running the ETF, right? And BlackRock created a premium on top of that because they were first to market. Morgan Stanley comes in and undercuts them. Does that mean that they're not making money? No, it just means they're making less money. And then what happens is there becomes competition in the marketplace. And then the profit premium continues to shrink and shrink and shrink and shrink and shrink until finally you're at a point where it's barely profitable to have that service or to offer that service because of the massive amounts of demand on the product and for the ability of other companies to offer that product at a lower cost. So at some point in time, Morgan Stanley and BlackRock will say, why does it cost us 8 basis points to run this ETF? How can we cut some cost and lower our costs so we can bring our price that we're charging our customers even lower? So the free market creates this position where the market price always gets pushed down and you have deflation. And this, in essence, is the problem, linking that free market cycle back to what we're actually looking at here. Why the hell are prices going up? Why is Morgan Stanley launching a Bitcoin ETF? Because they can see the problems, right? In practice, in theory, they're undercutting, they're performing, they're playing their role in the free market price discovery cycle, selling something that is protecting people, that is stopping from the free market price discovery cycle from taking place. Because the way the dollar is being diluted, $2 trillion of deficit spending, the war and all the missiles and stuff that we're shooting over there, the revamping of the military that's going to happen after the war, all of this money that is being spent, even if you say, you know what, close the government down 100%. Every single thing the government does, close it down 100%. Well, guess what? Medicare, Medicaid, Social Security, interest on the thing, you can't get rid of that. You made promises to people that you were going to pay those things. And if you just delete the whole government, the promises we made to people of what we're going to pay for still require inflation. They still require a deficit budget. They still require the infinite expansion of fiat dollars to pay for these liabilities, not just the debt that we're in at $38, $39 trillion, $100+ trillion of liabilities over the coming generations. So Morgan, I wanted to highlight the free market cycle and them undercutting on the bips, but I really wanted to highlight it's the solution. It's the value to the solution that the big boys are now seeing. It's not just the demand and the chance to make money. It's the long-term sustainable demand that is very obvious with the ETF that's going to come. It's not just that it's going to perform well. It's that for years and years and years to come, almost perpetual. It's a perpetual hold. You buy Bitcoin, you plug it into your portfolio, you use it as a savings technology. Well, how long do you save? Pretty much your whole life. Even retirement, you save. You start spending more than you save, but you're still saving. So this savings technology is going to be integrated into portfolios. It's going to be a long-term model, a long-term allocation, which means they're going to long-term scrape those bips off the top. And they know it's going to be long-term because they actually believe in the thesis. The big bankers now, the traditional financiers, are starting to understand what Bitcoin is as a perfect money. Not that it's a speculative tech stock, but in fact that it is a new form of money, an engineered money, and it's going to play a role in our society. And if you don't want to participate, you don't need to, but the rest of the world will leave you behind because it's an international phenomenon, not a local US tech company. So for all those reasons, I think this is, if you needed it, an extra final nail in the coffin, that the future of Bitcoin is locked in place and that temporary price discovery at the bottom of the S curve is still going to be extremely volatile. But without a doubt, over the coming decade, the adoption will accelerate, the integration will accelerate, and most excitingly, innovation around the asset class will accelerate as well.
Great breakdown right there. First principles thinking in economics is essential, and that's what leads us to Bitcoin, right? And it's why we all agree that Bitcoin is the best money and will always eventually be the reserve currency of the world here. And it's so interesting to look at it because, I mean, if you're on X every day, you're looking at Bitcoin just chop around the 60s, the 70s, you're like, why aren't we at $200,000, $300,000 right now? But these big boys, they're actually showing a lower time preference than a lot of Bitcoiners out there. If you think back, when did Larry Fink start going on his public tour that I want a Bitcoin ETF? After FTX crashed, right? It was in 2023 in the summer. He's like, okay, we're going to do this. And he made it happen. Of course, they've only, I think, had one ETF rejected out of the hundreds, if not thousands of ETFs that they've created over time. So what he gets, he wants. And he picked the bottom of the market to go and make a stand and say that Bitcoin is going to be here for a while. And now we see Morgan Stanley, another player that's on the same level as BlackRock, come out and say, okay, now we're going to do our own. I think they've only got 4 or 5 ETFs with their name on it, Morgan Stanley themselves, and Bitcoin is going to be one of them. Like, a huge bank like that does not lend their credibility, their logo on top of an ETF unless it's an asset underneath it that they really trust. So they pick their timing, and it seems as if they're getting a 40%, 45% discount off the all-time highs to go and enter this. And I think you're so right. They're going to be able to tell their clients, hey, we started this thing to get you in at the right time, right price. Trust us and stick with us because we got the lowest fees. And we'll see. We'll see how it all plays out. And if they're able to accumulate 500,000 Bitcoin once they launch next month, I mean, that could put us in a different zip code when it comes to Bitcoin these days. Absolutely.
The repricing of Bitcoin is going to be violent, and people are not anticipating it. They believe in this diminishing returns theory, specifically because of the halving cycle that we just went through. So this was the first halving that took place where during that cycle, we actually went into what we would call like tight money conditions. So that, we were coming out of zero interest rate policies, ZIRP, where the federal funds rate for the front end of the yield curve was 0 to 0.25%, right? And we were coming out of that, and we needed to raise interest rates because of what happened in 2020. And unfortunately, because we live in what they call fiscal dominance, the raising of the interest rate actually caused more inflation because what happened to our interest rate expense, right? Inflation, one soft way you can define inflation is budget deficit. So did the budget deficit shrink because interest rates went higher, or did the budget deficit grow because interest rates went higher? Well, when interest rates went higher, stocks did come down temporarily lower. A lot of receipts, tax receipts for the government are based on the performance of stocks and based on the performance of real estate. And we've seen the real estate market go completely dry. We've seen stocks perform okay, but more through dilution rather than performance. And then that eats away at tax receipts, which increases the deficit. And then at the same time, you have your interest rate expense going up, which increases the deficit. So they're stuck. They can't lower rates. They can't raise rates. They have to dilute. They have to inflate. And that's the scary part for us sitting on the sidelines here, trying to figure out, what can we do? What options do we have? Because no matter what happens with these interest rates, we're in a hurt and trouble. We're in a lot of trouble no matter which way this goes. And at this point in time, it's the real interest rate that matters, right? So I think Bitcoin's price right now, going through that cycle, if you told me the U.S. Treasury, you could buy a U.S. Treasury bill, not a note, not a bond. Remember, the bills are the ones that expire in 1 year or less. So these are short-term duration risk. At 5%, I would have told you that Bitcoin would not put a new all-time high in. That we would have to wait for investors who have turned into savers because of the higher interest rate incentive. We would need those rates to go back down, and for those savers to turn back into investors before Bitcoin put a new all-time high. So the fact that Bitcoin was able to put in $126,000, a brand new all-time high, during a tight money cycle, during a macro bear market, I don't think people are as bullish as they should be. Like, it is unbelievable that Bitcoin would have a bull market when treasuries rates were going up, right? Rates go up, prices go down. So technically it's a bear market, but the higher interest rate incentivize investing in the treasuries. So a lot of liquidity goes into that market, even though the price is taking bearish action. And Bitcoin still put a new all-time high. Wait until what happens. Powell is out in May, right? It's about to be April. There's only a month or so before Powell is gone. The new guy's in. he'll probably act tough for that first cut after he gets put in, and there'll be no movement. Markets will still be a little bit scared. But if you listen to what he's been speaking about with his narrative around AI, he believes AI is deflationary, and therefore he believes AI opens up the door to lower interest rates. And that's what we're going to see. I think going into the end of the year, we're going to see interest rates come down. We're going to see Trump's agenda and the administration's agenda accelerate when it doesn't have to fight against Powell and instead has the guy in. And now you're going to go into a macro bull market. Now you're going to go into a loose money cycle, and Bitcoin is going to be like in its bear market, right? So I think we get this bear market move that catches a lot of people off guard because we're too far from the next halving to see any movement. But actually, when you look at price action, it's been happening earlier and earlier pre-halving. So that people started to figure it out in cycle 1 and 2, and in cycle 3, it got front run. Well, I think in the next halving, it's going to be front run even further ahead, and you're going to get this huge bear market move that is actually going to destroy the diminishing returns narrative because Bitcoin is going to be repriced aggressively going into that next halving. And it'll just, as usual, right? When you have, for Bitcoiners who live on the Bitcoin standard, when you buy, the price goes down, and when you sell, the price goes up. You can't beat it.
Absolutely. I think you're so right when it comes to the Trump administration, everything that they want to get done. Of course, he's only got 2.5 years left of his term. So he's got a big legacy in his mind that he wants to cement. They got midterms coming up, and there's going to be a lot of money is going to be needed to be handed out to make those votes come through.
There's some promises made that haven't been kept yet. So those 2.5 years those promises need to come through for us.
Yeah. And as you said, Powell is about to be replaced, and with Warsh at the head of it all, Warsh has been harsh in the past, right? He doesn't like QE. He doesn't like the assets getting inflated at the expense of Main Street. But once you're in that position, it's the only way out is to inflate the currency.
It's a narrative thing, right? I mean, Bitcoin News knows how narratives work. You think Trump, after all the complaining he did over Powell, would then go pick somebody who wasn't going to do what he was going to do? But you have to spin it the right way, right? You have to get the financiers feeling comfortable that you're not going to go into some banana republic stimulus check movement again, which very well could happen. But yeah, I mean, he has to play tough. He has to be the hawk. And that's why I think on that first meeting, rates stay still. But then after that, they start to move in the narrative. They start to shift the narrative, and they start to lower those interest rates, because ultimately lowering the interest rate is going to do a few things for the economy, which include increasing tax receipts and reducing the deficit. So we're going to need to spend some money coming up here, and counterintuitively, because the system doesn't work like it did before, right? Before, if you're going to war, you better sell some war bonds because you need some money to pay for stuff. Now you don't need to sell war bonds at all. You just need to convince people that the war is a good idea. So it's more about narrative control than it is fundraising, because they have the ability to just print the money infinitely. They need the justification to print the money more than they need the money itself, because they can print the money, but they need that justification. And that's why the narrative control is so important around Warsh getting put into position, being sold as a hawk to the market, and then ultimately being able to fulfill the president's agenda, but in a way where people don't say the Fed is a puppet and this guy is a puppet, but instead using news and narratives to justify the interest rate cuts. I think, we've seen it time and time again. It's nothing new. It's the same old stuff just being thrown back in our face. But with Bitcoin, we can just laugh about it, because the more they print, the more purchasing power they transfer to us.
100%. It's a big horse and pony show, and they're going to have their justifications for different things, but there's only one exit for them, and that is diluting the currency. And that is why you need to get the one thing they cannot dilute, and that is Bitcoin. And if you're going to buy some Bitcoin, we recommend going over to our friends at Rhino. Previously, getting access to Bitcoin financial services was slow, clunky, and scattered all over the place. Well, Rhino is changing that with the next generation Bitcoin banking app designed to handle all your Bitcoin needs in one place. With Rhino, of course, you can buy Bitcoin some of the lowest fees anywhere. Make payments over the Lightning Network instantly with near zero fees. Send cash globally. Send your Bitcoin over fiat rails. Have them receive the fiat at the other end over Bitcoin rails. And of course, you can set up an automatic savings plan, DCA, stack sats on your schedule, and build wealth over time. Soon you'll be able to pay bills, direct deposit, borrow against your Bitcoin, and even save for retirement, all within the Rhino app. You go today, download the app at rhinobitcoin.com, use the code Bitcoin News. That's one word, Bitcoin News. Rhino will drop you $10 of Bitcoin right into your wallet just for signing up. And they're also really into getting you free Bitcoin. So go over to drop shop.rhinobitcoin.com, and you'll be able to play this little game we got right here. I got to show you this. I might take down this video to show you sats drops. So they got this new game here where you can just get 3 drops per day, and you get to drop a little plinko ball down and see how much sats you can win. You can win up to 10,000 sats per drop. And again, that is drop.rhinobitcoin.com. Super fun way to stack some sats on a daily basis and get a little rush when you see where's it go? Where's it go? Oh, right there you go. 1K Bitcoin, 1K sat. Really awesome stuff happening over there at Rhino. Again, that is drop.rhinobitcoin.com. Awesome. All right, let's get this back going here and bring up CJ back to the stage. And CJ, we got to talk about this regulation stuff that's going on because there's some interesting stories happening over the last week. First one, quick one. Hong Kong updates its national security law, making refusal to provide passwords or assist with a device decryption a criminal offense, punishable by up to 1 year in jail and 100,000 Hong Kong dollar fine. This was a really crazy story that we highlighted last week, went pretty viral. And of course, it doesn't mean that they're going to be able just to take everything of yours. They have to have an excuse. But if you deny the police when they say to give you their stuff, if you don't allow them to unlock your personal devices, your phones, your laptops, your wallets, they can put you in jail for a year now. And this applies to anybody, even those just transiting through the Hong Kong airport. So this is pretty wild stuff. What's your take on it? Do you think that this is going to happen to more places around the world?
Well, I hope not. This is, I'm not a fan of the TSA. I'm not a fan of this type of stuff. I think it's overreach. Now, I do think if you're under criminal investigation and you've been indicted, then yeah, you do have these obligations to work with the government and to help them prove your innocence, right? Or if you're guilty, then to be found out. But that's part of just society working the way it should be. I am not a fan of the direction the world has gone in since COVID. I think since 2020, freedom is collapsing. It's collapsing faster than the dollar. And we need to be playing defense, right? I mean, what's the point if you're financially sovereign, but you live in a government that doesn't let you have freedom, right? So we have to continue to be active in politics. I know you don't want to. I know I don't want to. I'm not even sure. The only vote I know that counts is the vote I make with my dollars. So I have to make sure that the vote that I make with my purchasing power goes towards the things that I support and that I want to see come to fruition. But unfortunately, I think we live in a world where when, that it's that famous quote, when good men do nothing, bad men take the lead. And good men who want to raise their family and be left alone in peace, that's not working anymore. And the good men need to step up and take on the added responsibility to make sure that the governments that we give authority over ourselves and that work for us are not impeding on our financial freedom or our right to privacy. But at the same time, the rule of law is upheld, right? You can't have all out anarchy, but there's a happy medium somewhere in between. And right now, we are not at that happy medium point. We are on the wrong side of the scale. Can go towards, communist, socialist controls all the way over to complete anarchical freedom. And I think we got to be somewhere in the middle where we can feel comfortable that people who are working for their life and don't really have a chance to be a politician or to get into that position can still have their voice be heard. And that's why I love Bitcoin, right? Run your client, get your vote counted 24/7. Like I said, I don't know if my vote really counts. The only vote I know that counts is with my purchasing power. So I got to take that purchasing power and I got to support politicians that I believe in on the local level who can then represent me on a national level. And it's not fun. It's not what you want to spend your time doing, but it's the way our system works. And we have to acknowledge that the system works that way so that we can defend ourselves. And this is just an example of a case where there is overreach. And if people don't step up and say something, then that overreach will spread like a wildfire. Because if you give a government 1 inch, they'll take a mile.
Yeah, and one group of Bitcoiners that is really doing that dirty work and going out and talking to politicians on a regular basis, of course, is the Bitcoin Policy Institute. And they were just in DC last week to talk about Bitcoin tax reform, and the news is not good. But if it wasn't for them, we wouldn't know about it. So they're getting the word out early, and hopefully we're able to raise enough of a ruckus to make sure that the politicians know we are not happy about this. What are we not happy about? The new draft law for crypto tax excludes Bitcoin from de minimis tax relief and keeps mining double taxation for Bitcoin miners. And so this is really bad news. We were supposed to get de minimis capital gains tax relief for Bitcoin transactions under $600, right? Well, no, they just want to keep that for stable coins, which makes no sense, right? And then they are giving preferential tax treatment to those who stake, like Ethereum, but not for Bitcoin miners. So this crypto tax bill is different from the Clarity Act that is currently going through the Senate right now. It seems to be pushing forward over there on the Clarity Act, but this one over here is just as, if not more important, especially when it comes to Bitcoin. Having this de minimis capital gains tax exemption would be absolutely huge for Bitcoin adoption in America, for progress, for freedom money. And yet it seems as if there are politicians out there who want to put a roadblock on it. Shout out to the Bitcoin Policy Institute for doing the dirty work, going out there into DC and talking about these issues, making sure that they are risen to our awareness. And yeah, we need to make sure that this does not happen where only stable coins get de minimis and not Bitcoin. Insanity.
Yes, I mean, stable coins, it doesn't really, what it really shows is who's paying the money for this, because the only reason stablecoin has volatility is if you're a market maker, right? Because you get it into a liquidity pool. It's the most profitable business in the world because of DeFi. When people are buying stable coins for less than $1, and you have the ability to sell stable coins for more than $1, it's very profitable, right? Because the stable coin is backed by the asset on the balance sheet, which is the cash equivalent dollar that it really exists. So when you get that stable coin back in your hand, you always can get your one-to-one dollar for it. So if you can go into a liquidity pool and buy it for 98.9 cents and sell it for a penny and a tenth of 1 penny, this adds up. These transactions add up. And when you make markets that way, you create capital gain. So it's very clear that the market makers are the ones who are spending their purchasing power on the lobbying, because they're the ones who want to eliminate the capital gain on their market making activities with the stable coins. And that's, just coming from an economic first principles perspective, that's the very common, obvious thing that's happening here. But the Bitcoin de minimis it's an interesting concept. I think it's a no brainer. Right? If you're spending a insignificant amount of Bitcoin, the opportunity costs to that person of tracking the cost basis and this for a cup of coffee or this or that here doesn't create any real revenue for the government anyway. And then at the same time, it does create a lot of cost and time to the filer. So it just seems like a common sense thing that you would have this de minimis. But at the same time, my position on Bitcoin, especially as somebody who has been forced to spend some of my Bitcoin, particularly spending, 100 Bitcoin buying my first family starter home, small 2,200 square foot, 5-bedroom family starter home, 100 Bitcoin. Even today at the massive sell-off that we're in, this pullback that we're in right now, it's a $6 million home. I can promise you right now, I do not live in a $6 million home. And in this market, I couldn't even get $500,000 for my home because the market is frozen. I need to fire sale it to attract a buyer. So, I spent a small amount of dollars on a home, which cost me 100 Bitcoin. And now that Bitcoin's worth over $6 million and my home isn't even worth 500 grand. So as somebody who went through that experience, yeah, de minimis makes sense because you shouldn't create this extra burden and people should be able to spend their Bitcoin. But I think Bitcoin is a savings technology, and we need to figure out a way to optimize it as a spending technology. And the most interesting dynamic is that when you use Bitcoin as a collateral, you can unlock its purchasing power by spending the dollars that you borrow against the Bitcoin. And then over time, as you're making payments on that debt, the value of the Bitcoin will grow at a rate and pace that the value of the debt does not grow, because it's a fixed dollar denominated debt. So what happens is the burden of your debt shrinks over time. And I think this is the hack, right? This is how Bitcoiners live. I mean, if you're living on a Bitcoin standard truly, then this is how you are doing it. You are borrowing against a small portion of your stack and spending those dollars, right? It's Gresham's law. Bitcoin is the best money. You do not spend the $7 on Bitcoin so that you can make a post on X. I made a post on X at Steak and Shake. Guess what? I paid with dollars, because why would I spend my Bitcoin? I already bought a $6 million house that's not worth 500 grand. Now I got to buy $1 million burger too? No. So, learning how to unlock the purchasing power of this pristine collateral, of this engineered money, of this savings technology, I think is going to lead to the next wave of adoption in Bitcoin, because people will see it for what it really is, a pristine collateral. And that pristine collateral allows you to take debt out against it, spend the purchasing power into the world to increase your quality of life and standard of living. But at the same time, you're double dipping. It's like that side, you double dip the chip. Are you a double dip chipper? Yeah, we're double dipping. We got the asset side of our balance sheet outgrowing and outpacing the liability side of our balance sheet. If you spend it, the only thing that's happening is the asset side of your balance sheet is going down. So yeah, we should have de minimis. It should be common sense, but also at the same time, for Bitcoiners who are holding their Bitcoin, who want to become a little bit more sophisticated on how to unlock that purchasing power, its integration into TradFi and its acceptance as collateral is going to open up a whole new way of spending Bitcoin that is far better than giving up ownership.
Well, you just teed up the perfect segue, because we're going to spend the final 15 minutes of the show talking about the new Coinbase Bitcoin-backed mortgages, and of course, what you're doing at People's Reserve, which is a whole nother spin, a whole nother level of house buying with Bitcoin as collateral. But before we get to that, we got to talk about what you just teed up, which is unlocking the liquidity of your Bitcoin by taking a loan against it. And that is exactly what our friends over at Arch do. They are the world's leading destination for Bitcoin-backed loans. They provide world-class security and white glove service, so you never have to sell your Bitcoin. If you listen to this, you did the hard part. You stacked, you held, you didn't panic sell, but big things happen. Say you want to buy a house, just like CJ did. There's other things like taxes, new opportunities, but you don't want to sell your Bitcoin. Don't make that mistake. What can you do instead? You take a loan out against your Bitcoin. Think of it like a flexible line of credit with rates starting as low as 8.5%. You just borrow what you need, repay anytime, and only pay interest on what you use, all without triggering a taxable event. So go today to archlending.com/daily stack. That's archlending.com/daily stack. And if you use daily stack as the code word, you'll get a point off of your APR. So this is super big news, right? I mean, being able to take a loan out against your Bitcoin as easy as possible. Just post that collateral, get that cash, and go and live your life. Unlock that liquidity, make use of your Bitcoin, and Bitcoin has been proven to grow faster than these rates, right? That's the whole point of this operation here. All right, so CJ, we got to talk about this right here with Coinbase. Coinbase, Fannie Mae, and Better Home launch Bitcoin-backed mortgages, allowing borrowers to use Bitcoin for down payments without triggering taxable sales, with no margin calls or collateral top-ups. Very big news on the timeline, came out last week. Want to get your take on this? Do you think Coinbase is a trusty partner in getting a Bitcoin-backed mortgage? And what do you guys at People's Reserve do differently from this?
Well, I think it's great to see that the marketplace is evolving so quickly. To me, the next big wave, like I said, the next big wave of adoption is going to be understanding Bitcoin as a collateral rather than just a money, because it's easy to understand as a savings technology. It's a little bit harder to understand as a spending technology. But when you have that collateral component, it becomes very easy to understand how you can borrow dollars and spend dollars in place of the Bitcoin as the Bitcoin secures the loan. And I think it's great to see that the marketplace is looking for different solutions. And, I personally use Coinbase for money that comes in and out of the system. I use Kraken. I have a bunch of different accounts because I'm trying to, solve different problems that I'm facing as a Bitcoiner who lives on a Bitcoin standard. And that's really what People's Reserve is about. People's Reserve is about becoming your one-stop shop. Just me as someone who's experienced over a decade in this industry, why can't I just do everything I need to do in one spot? Why is it so bifurcated? Why do I have to have 10 different providers to do everything that I want to do? So that's one of the first problems that People's Reserve is solving for, just being that one-stop shop for your real world and digital asset management. The second thing is it comes down to the mortgage product itself. So, I don't know all of the details of the Coinbase mortgage. What I do know is what I've seen on some breakdowns on X. And from what I can understand, you actually will have two contracts. So if you want to buy a $500,000 home and you need to make $100,000 payment to reach that 20% threshold so that you can qualify for the financing, it's a 40% LTV. So you need about 250 grand in order to get the $100,000 up front. And then that $250,000 of Bitcoin is locked over the life of the loan. So it's held by Coinbase until the loan is paid off or you refinance or whatever, and they get back their money, you get back your Bitcoin. Makes perfect sense. But what we do, People's Reserve, and we have the utmost confidence. And like I said, we are a free market. I love that other companies are coming up with ideas of how to integrate Bitcoin into real estate, because that's where the marketplace has to go in order for it to grow to the level that we as Bitcoiners want to see it grow to. It has to work its way into the system through real estate, through collateral, through financing, through all of these things in order for it to truly succeed and become that world reserve asset, right? I think the dollar will still be the world reserve currency because the dollar is not a savings technology. It's a spending technology. It's accepted everywhere. Why rebuild those rails? Let those rails be as a currency, but know the difference between currency and money. You can earn currency, you can spend currency, but you sure as hell can't save it. So you got to make sure you're using both of those tools, like a gardener who has a shovel and a rake, different tools for different objectives. Now, when you bring that idea together and you say, what are you doing at People's Reserve and what makes it so interesting? The first thing is, and I loved seeing this on Coinbase's thing, no liquidation risk and no collateral call-ups. So that is an idea that People's Reserve was a first market mover on. We were the first ones to come out and say, hey, you're going to be able to get a loan with no liquidation risk. And that came directly from my experience because I had a choice when I bought my house, Rob, with that 100 Bitcoin. I could have went and borrowed against 200 Bitcoin and had a healthy 50% LTV. But the problem is when you borrow against Bitcoin on margin is that you do have price volatility based liquidation risk. And 6 months later, in my case, COVID would have hit and Bitcoin would have dropped from 10 down to 3,000. If you were around that time, nobody could log into anything. The only orders that got filled were already resting orders sitting on exchanges. And it was just very fast and nobody could do it. So I would have paid $12 million for my $500,000 house, or at the peak, $24 million for my $500,000 house. So I think that, experiencing that myself, seeing the risk that was there, I'm happy that I spent my Bitcoin because I would have ended up spending 200 instead of 100 if I had borrowed against it. So seeing that you can have a non-mark-to-market loan is a really big progression in the space itself, understanding the value of Bitcoin over the long run, that it doesn't always need to be tracked to margin, because in the long run, as an engineered money, it does accrue value. So if it's missing that value in the short run, we either have to let that go or make up for it in another way. And what we have two products at People's Reserve, which I think, I have complete confidence in our contracts and our value proposition relative to other competitors out there. And the first thing is because it's based on our infrastructure. We have People's Reserve, and we also have TrueFi. So if you don't know TrueFi, check out TrueFi.fund. They are the exclusive LP for our Bitcoin-backed mortgages. And they take those mortgages, TrueFi does, and they package them together and they issue a private label mortgage-backed security. Now, what's interesting about this is you might remember Trump a few weeks ago ordered Fannie and Freddie to buy mortgage-backed securities from the marketplace. Well, why would he be ordering them to buy mortgages? Well, the first thing is when you buy mortgages, it presses the interest rates down, which means it makes homes more affordable. So there was some around $200 billion of buying demand from Fannie into mortgage-backed securities. But why isn't there a natural buying demand? Well, because it turns out that, the real rate of return on mortgage-backed securities relative to the risk is actually negative. So when you have 80% plus LTV loans in the form of credit-based promises in a shaky economy where jobs are going the wrong way, a promise to repay and a property title are really not the best forms of collateral to secure the loan, especially in a frozen marketplace like right now with real estate. The value of that collateral, it's like a car. Usually the value of a home collateral stays strong and grows over time, slowly matching the rate of dollar dilution. But at this point in time, because interest rates are so high and we're in the middle of an affordability crisis, if someone doesn't pay and defaults on their mortgage, you're not going to get the face value of that home. If you just bought that home for $500,000, you might have to turn around and sell it for $450,000 or $400,000 just to get that liquidity in a short amount of time to recover the money that you lent into the loan. So there are some big issues within the mortgage-backed security market, which is why it's government guaranteed in the first place. And what TrueFi is doing by packaging these Bitcoin-powered mortgages together and issuing their private label MBS called a collateralized sum money obligation, it's really redefining the risk-reward metric when you talk about investing in mortgage-backed securities, because now there's a third collateral component. It's not just the promise to repay. It's not just the property title. It's also the pristine collateral. And it's the pristine collateral in the first position. So if something does go wrong, you have access to something that is 24/7, 365 liquid that you can get in your possession within 10 minutes. And that value proposition actually secures the mortgage-backed security market. And when the market is more secure and the risk reward makes sense, it becomes more investable. And when it becomes more investable and there's more demand, that pushes down interest rates. So it's funny that we have this interest rate problem that we talked about earlier. And how can we lower these interest rates without stating the rate lower, without creating quantitative easing programs and yield curve control programs that force the government to print money and buy the issuances off the marketplace in order to press the rates down? How can we create natural demand? Well, we can change the risk reward dynamic. And that's what TrueFi does. So the first thing is, I haven't confirmed this, but I believe with Coinbase, you are paying a premium in your interest rate that you're borrowing. So it's going to be prime plus, right? So if you go to a banker, if you borrow from Arch and you put down 250 grand and you borrow $100,000 from Arch for your down payment, and then you go to a traditional mortgage company and you say, I have $100,000 for my down payment, then they might give you 6%. But if you go and you do it with Coinbase, from what I understand, there might be a premium baked into it. So basically you're getting penalized for utilizing your Bitcoin as a collateral. Now, I haven't gone through the contract process and I don't know anybody who has, so that is completely speculative. But what we do at People's Reserve is we make sure that you, as the holder of Bitcoin, the most pristine form of collateral in the world, have access to the cheapest interest rates in the world. So with both of our products, the self-repaying mortgage and the Bitcoin mortgage reserve product, the self-repaying mortgage being for people who can post 100% of the purchase price of the home. So if you're buying a $500,000 home, you post $500,000 of Bitcoin, and we're able to get you a rate as low as 3% APR based on your loyalty level. So that 3% is 50% below the current prime rate. And that's the way it should be, because there's significantly less risk. And the price of money, the interest rate, is not just based on the supply of money and the demand for loans. It's based on the risk variable. And you are eliminating that risk by having the property title worth $500,000, the Bitcoin worth $500,000. You're basically at a 50% LTV. So these private label MBSs are going out at very low LTVs relative to the 80% plus LTVs we see in the traditional mortgage-backed security market. And that gives us a whole chance to redefine the price of money based on Bitcoin as a pristine collateral, instead of being dependent upon a banking partner who is dependent upon central banks stating the price of money across a yield curve. So that gives our borrowers a really big advantage. But a product that we recently announced and that is getting a lot of attention is the Bitcoin Mortgage Reserve product. And this is the difference, I think, between integration and innovation. What we're seeing at Coinbase is integration, and it's beautiful. It's great to see. I support it. I wish them the best. I think they're going to crush it. I think they should, because it's really cool. But that's integration. What we are doing is innovation. This is a contract that we've worked with DLA Piper, one of the best legal teams I ever worked with, to create 50 different seller financing installment contracts for deed that are going to be workable in all 50 United States. Now, we can only service U.S. properties. We cannot service international properties. TrueFi will need to launch an international fund before we can service non-U.S. properties. But I do think that's in the cards once these U.S.-based properties prove the power of the product. But with the Bitcoin Mortgage Reserve, you only need 20% of the purchase price of the home. So if you're going to buy a $500,000 home, you don't need a $100,000 down payment. You need a $100,000 contribution into your Bitcoin Mortgage Reserve. And then what happens is, based on your loyalty level, you split that reserve. So it's up to 50% works of that reserve for the borrower and up to 50% works for the lender. But what happens is you get the financing, right? So you're buying a $500,000 house, you contribute $100,000 into the Bitcoin Mortgage Reserve. you get the $500,000 house financed for you. Over the years to come, you don't lose the Bitcoin. The Bitcoin works for you. And at a certain point, as you're making your payments, the amortization schedule, principal balance due, will meet with the Bitcoin mortgage reserve value. And when that value meets, the Bitcoin is liquidated and you own your home free and clear. So this is a really exciting product that allows you to get your keys today, but still hodl the upside of Bitcoin. And if you want to get 100% of your Bitcoin back, you don't want to liquidate your Bitcoin, use the self-repaying mortgage, because at the end of the loan is closed and you get back 100% of your mortgage. But of course, you have to put up 100% of the purchase price of the property to use the SRM. So those are the trade-offs, and those are the definitions of integration versus innovation. A way to facilitate traditional mortgage payments versus a way to integrate Bitcoin to get traditional financing, but leverage Bitcoin to decrease your debt and become debt-free and increase your free cash flows to increase your quality of life and standard of living.
It's amazing what you guys are doing over there. And I really don't think that most market participants have really wrapped their head around how you're flipping the whole entire mortgage game on its head, right? Coinbase, this is like tried and true. Like that's been all been done before. But what you're doing with Bitcoin and real estate is completely different. And I'm absolutely so excited to see what you guys are able to do, especially when you make some big announcements later on in this year. It's going to be very, very cool. Well, CJ, we are here at the end of our hour. This has been absolute tour de force. You've got some great takes on all these different subjects. I could throw anything at you and you'd have the greatest 2-minute segment to clip right away. But for everybody who's watching, thank you so much for being a part of this. Head on over to youtube.com/dailystacklive. We're building a community over there. We've just got around 300 or so subscribers. We want to build that up to 1,000 super soon. And we got our lives, we got our edited podcasts, we got shorts. Everything is happening over there at youtube.com/dailystacklive. CJ, you've been the absolute man. Gotta have you on again. If you have any big announcements, let us know. We'll blast it out from Bitcoin News, because what you're doing is helping Bitcoiners get on that real estate ladder where so many people in our generation feel like they can't even get started there. So really appreciate you and your work.
Thank you so much for having me. It was great. I appreciate the kind words, Rob. And absolutely, Bitcoin News will be one of the first to know if we have any big announcements. I love your work, and everybody, if you're following me, you should be following Bitcoin News too. You don't get fake news with them. You get the real deal. So thank you so much, Rob. And I look forward to coming back again.
Yeah. And just tell the people the website. Where should they go to check out People's Reserve?
Oh, yeah. Check out peoplesreserve.com. And while you're there, go play with the calculators. I'll tell you, be careful, though. The calculators are addicting. They are fun, and they make Zillow shopping more fun.
There you go. One of Bitcoiners' favorite activities. All right, everybody. We still got more content coming up. We're going to throw up the 5-minute timer, and then we got Sean and the crew coming at you with a whole new hour of the Daily Stack. It doesn't stop. It keeps on going. Thank you so much for being a part. Until next time.